Hello, welcome back, guys. After creating a video about PayPal, it's time to take a look at Robinhood, which also reported earnings today. Now, I have significantly bashed this company many times in the past, urging people to be careful about it because it has been doing terribly in terms of financials. And unfortunately, it seems like it's doing worse and worse, never really recovering, at least so far from $85 to 9 right now, and it's going 9.23, and it's actually going towards 9, it looks like. Now, if we take a look at the stock news, you will see that Robinhood cuts 23% of staff. CEO of Lad 10F says, this is on me. Now, obviously, this is terrible here, absolutely horrible for the company. Pretty huge round of layoffs. 23% is nothing to sneeze at. And we do need to examine what caused that and what is happening in regards to the company, the financials, and what did they do in terms of the earnings report. So let's take a little bit of a closer look at that first before we dive into the financials and whether this deserves a potential purchase for a portfolio. So here's a nice report from CNBC here. Again, Robinhood cuts about 23% of jobs as they release second quarter earnings. So let's see what they did here. Now, you will see that in terms of revenue, the company did 318 million versus 321. So a little bit of a miss here, not massive, but still. 34 cents per share versus 37 cents estimated. Again, not a massive difference, but still a miss. And remember, this is a loss, by the way. They are not making money. Robinhood's total net revenue of 318 million was up from 299 million in the first quarter at least. However, that revenue number was still well below the 565 million reported in the second quarter of 2021. So the company is going backwards here, and this is not a great time for foreseeing that as an investor. Again, as we are entering a weird phase in the economy, all these companies that are kinda not making any money, very frankly, and we don't really know what they're gonna be doing in the future. They are getting totally destroyed, annihilated from the Wall Street here, and the stock has been down tremendously, about 90%. Absolutely insane. And again, I have talked a lot about being careful about this company, and hopefully people have listened, because right now it has been pretty much getting some tremendous pressure from investors, going down about 90%, especially as the market opens tomorrow. We're probably going to be seeing this exact number here, 90% or even more, really. Now, this company is very problematic, and the fact that they are not profitable has the CEO pretty much taking this step of letting 23% of the staff go. This is really concerning for the company, as you can understand. Although it could affect the earnings in a positive manner, you don't really want to lay off 23% of your staff. That's a lot of people, and it can really hurt your operations. Now, whether that will happen or not, we will see in the next few quarters, but 23% is a very big amount. And if we take a look at the stock's financials, it's a story of negativity here, and you can already see that in our foundational metrics. Everything is red for the most part. P ratio in the red and negative, price to free cash flow ratio also negative, outstanding shares that are getting increased instead of going down, although not by much. This is a slight negative. Total liabilities to free cash flow is negative because the company is not making money. Net income going down, free cash flow going down. It's only the revenue that is going up, but not tremendously. I mean, we are still below 2 billion here, as you can see. So this is not tremendous growth over here. And if we take a look at what happened again in terms of the revenue that the company generated, that was 318 million for the quarter. And again, we are probably sitting at about a similar range here, if not less than 1.8 actually at the end of the year. So yeah, things are looking a little bit dire here for the company. Now, the company, of course, is not profitable, so the returns are going to be negative here. So bad signs again for the company. And in terms of what they are doing in their financial statements, you can kind of see the story over here already. Again, this is a new IPO, but you can quickly see that yeah, they have been increasing their revenue because they have had this influx of users that were trading on Robinhood. But remember, Robinhood is just another broker that just happened to be around and become the trend of the time, really. But there's nothing proprietary about it, and there's tons of competition around. And when this kind of trend dissipates, what is it left? What is there that is left for Robinhood to compete with other brokers of that sort? There are so many right now already that are in the same space. Now, Robinhood was a pioneer in the sense of allowing investors not to pay for their trades and actually making this the trend really for a lot of brokers, even very very well known brokers like Schwab, for instance, which were actually charging some money for a trade, sometimes even significant money, like $3-4 per trade. They are actually doing it for free right now. So actually, Robinhood helped with that. But in terms of their financials, they are not doing great here. They are losing money hand over fist over here, as you will see, and you can see that their financials overall are getting tremendous pressure. Their equity is up, sure, but this happens why? You can kind of take a look at what actually leads this kind of increase here by taking a pretty much of a pretty deep look in the assets of the company and the liabilities of the company over here. And the thing that will tell you a lot is the additional paid-in capital here, which added 11 billion in the equity of the company here. As you can understand, this actually played a tremendous role in the total equity of the company. That's just because they were basically selling stock here. This is what actually increased their total equity. But other than that, they are not increasing their equity based on their operations. It's not like they are making money to do that. And you can kind of see that on their cash flow statement over here. A net income that is negative leads to negative operating cash flow, even after the adjustments for a lot of stock-based compensation, as you would kind of expect from a company of this sort, a Bay Area company pretty much. And you will see cash from investing activities in the negative. This is a usual thing. But over here, net cash from financing activities, you will see common stock issued, significant common stock issued here, and financing activities, the company is getting debt, which is both things that you don't like to see from a company here. They are struggling. I mean, if the company has to take debt and also pretty much issue common stock in order to get some extra funds, that's not looking great for the company. There's no money to be made here. They're not making any money. Now, they were making some free cash flow in the previous year, but now it's in the negative again. So yeah, a very very dire picture for Robinhood right now. And the thing is, after being down 90%, it may be an interesting opportunity for the future because it's too cheap. Is that the case? Let's take a look. Now, the revenue growth of the company has been, again, all over the place because it's a new IPO and has been growing tremendously through the past 2 or 3 years. Now, we will go still with still a large amount of growth here, 20, 25 and 30 is what we're going to try. And the problem is when we're taking a look at the net income margins, which are negative because the company is basically not making any net income. And the problem is, what are we using here? When this happens, when we're looking at negative net income margins, we typically want to assume marginal profitability, something like 1, 3, and 5% over here is what would make some sense, potentially. Although this is, of course, as you can understand, very, very aggressive and very confident about what the company is going to do, and more than likely is not going to happen. But again, this kind of serves as a as a baseline, because we need to see the company, what happens with the company when they at least achieve marginal profitability, because if they're not profitable, what are they worth to us? It's tough to say for sure. Now, the free cash flow margin, again, all over the place because many negative years, some years are positive because of the adjustments, the stock-based compensation and things of that sort. So we're going to go with something that is relatively normal, 80, 90 and 100%, and see what we're getting again out of this. And, whoops, if I could type that is, and 13% for our annual return here. Let's see what we're getting now. Yeah, as you would expect, things are not looking great. Even though we're sitting at $9, this still looks very expensive for what the company is currently worth. And with a net income margin of 5%, which is nowhere near what the company has been achieving yet, we are still sitting at about $2 to $3 over here. Actually, less than three. And so, yeah, right now the current even now the current price of the stock, which is going to be $9 when the market opens tomorrow, it looks like it's still expensive, and so I just cannot see myself entering. It would have to be lower, significantly lower, probably $1 to $2, frankly, and even then it could be a little bit of a stretch, but it could be interesting. But at $9, yeah, it's just not happening for me. It's still very expensive for what the company is doing, and they seem to be actually ahead, looking actually at for some even worse headwinds potentially in the future. So yeah, that's what I wanted to talk about in terms of Robinhood. Let's see how that plays out in terms of the layoffs, but things are not looking great for the company. Tell me what you think about Robinhood, if you own that, if you're thinking of potentially buying it right now as it goes down. What do you think about it? Leave a comment below. I'm interested to hear your opinions. And thanks for watching the video. Remember to leave a like and subscribe. And also, if you are interested in this kind of analysis, you can always become a Patreon and get access to this tool. Find the links in the description box below this video, and join us also in our Discord channel if you're interested. Everything again is in the boxes below. Thanks again, and I'll see you in the next video, which is probably going to be about AMD, another one that actually reported earnings. Thanks again, and I'll see you soon, guys. Bye bye.